Hello everybody! Today we're going to have a look at StoneCo, ticker symbol STNE. So this stock's been on a pretty wild Roni Baloney inspired ride over the last 3 months, falling from about $46 down to $18. Currently it's up 121%, trading at nearly $40 a share. But before we get into StoneCo, let's have a brief look at the environment in which it exists. Brazil. Brazil is the 9th largest economy in the world, and along with Russia, India, and China make up the BRIC countries, which are noted for their potential to become developed nations. BRIC countries control 25% of the world's land and 40% of its population, which gives them a lot of bargaining power as a group. Brazil's GDP has nearly quadrupled since 2003, and their GDP per capita is 4 times that of India. At $9,000 US, it's similar to that of China or Mexico. Unlike China, the government of Brazil is very similar to that of the United States. It's considered one of the most pro-American countries in the world, and its presidents are viewed as regional allies. Unfortunately, Brazil carries a lot of debt, and it's currently about 75% of its GDP, and their bonds are below junk rating. Even worse, an event like the 2020 crisis will probably only exacerbate such a situation. Even though Brazil's exports are largely soybeans, iron ore, and crude oil, 67% of their GDP is in the service sector. And that's where StoneCo comes in. StoneCo is a financial technology company, which the cool kids call Fintech. It's somewhat similar to Square or PayPal. And with such a high amount of Brazil's GDP being in the services industry, and Brazil being an emerging market making the switch from cash to a digital currency, there's a lot of room for StoneCo to grow. I'm gonna end up calling it Stone Cold like 15 times. The company was brought to the forefront of the American consciousness when Warren Buffett and his company Berkshire Hathaway decided to invest in it. Although my guess is it probably wasn't Warren's decision directly. Similarly, Chinese businessman Jack Ma expressed interest in the initial public offering. StoneCo is led by CEO Thiago Piau and was founded by Andre Street and Eduardo Pontes in 2012. Back in 2010, 3 banks controlled about 75% of the payments market, with Visa and MasterCard being the big players having about 90% of the credit card market. But regulatory policy changes made it possible for smaller players like Stone to enter the arena independently. Between 2012 and 2018, Stone acquired PayGarMe, which is a payment service provider. It enables merchants to accept credit cards and bolitos, which are kind of like a bank wire. We don't have bolitos here, but I like that word. Bolitos! They also acquired MondePeg, which is an e-commerce gateway that allows merchants to accept a wide variety of payment options. And Equals, which offers reconciliation services for customers with different acquirers. It gathers the sales from all payment methods into a single platform. And finally, Capita, which handles the transfer of electronic funds. So StoneCo provides an end-to-end platform for businesses to conduct electronic commerce. They charge a fee for transactions, equipment rentals, subscriptions, and whatnot. Essentially, they receive a payment from the bank and give that money to StoneCo's client. They're a middleman in a financial transaction. StoneCo needs little to no working capital unless a client wants to be paid before a transaction's actually gone through. Then StoneCo actually needs to come up with the money themselves for a short period of time, or have a third party come up with the money for them. Because they're just a middleman, on the balance sheet, accounts payable and accounts receivable are going to be liabilities and assets, respectively. However, they're the same thing. One is the money brought in from the bank, and the other is the money paid out to the client. Now, certainly StoneCo does more than just this, but I would say this is at the heart of their business, at least currently. So what have they been doing as far as expansion is concerned? StoneCo recently made 3 acquisitions which are in the process of being finalized. They have a 100% interest in MVarandas, which develops software and services for the food services market. This is an enterprise resource planning and point-of-sale software company. They also have a white label delivery app for their merchants, and you can see where this is in StoneCo's ballpark, and they operate in small to mid-sized cities. They also have a 50% interest in MLabs, which develops a social media integration platform. StoneCo believes that this company has the potential to become a major social commerce platform for small and medium businesses. And they also have a 100% interest in Vitta, which is a health plan management company. This is a network of 15,000 doctors and manages 100,000 lives. That's a lot of people! They offer plans for small and medium-sized businesses. So this is a health tech company with an innovative business model. So you can see where each of these companies is not only interesting in general, but is made more interesting by the 2020 crisis. StoneCo also recently just launched TON, T-O-N, which is a partnership between them and Grupo Globo. This looks to me like Interact payments for micro businesses. They're also expected to have financial products like credit and insurance. Grupo Globo is the largest mass media group in Latin America and will use their broadcasting abilities to get the word out about TON. But because of the 2020 crisis, they've decided to put the brakes on TON for a short period of time. That way they can focus on improving the platform and testing different distribution channels. They'll then start pumping money into that venture when the market's more favorable, which is probably a good idea. TON started operating March 1st, 2020, and currently has 23,000 clients. So how has Stone been influenced by the 2020 crisis? Well, one perceived negative is that Stone is a brand new company and hasn't been through a calamity like this before. However, in their defense, the founders were in this business long before they started StoneCo, and Brazil only recently came out of a recession. So that idea is not entirely true. StoneCo, like many companies in the tech space, have restructured themselves to allow more employees to work from home. Unfortunately, although probably not surprisingly, they've had to reduce their workforce by 1,300 people. On the financial side, during a crisis, companies are going to try to come up with money. They try to become more liquid. That generally results in the company taking a short-term loss as a defensive tactic. They end up taking an L, man. In Stone's case, they sold some longer duration receivables and ended up losing some money in bonds as a result of increased market volatility. However, all that aside, I would argue that StoneCo is in a great position to profit from the 2020 crisis more than most companies. On the positive side, the online business model is doing better than ever before because of the 2020 crisis. More transactions are being handled digitally, and 50% of e-commerce transactions in Brazil went through Stone's platform. In emerging markets like Brazil, this sort of crisis is going to get people on board. Folks with the old mentality who predominantly use cash are going to see the value in switching to a cashless society. And for better or for worse, StoneCo is going to be the beneficiary. In a market like Brazil, a lot of people still use cash. It's not like it is over here where cash is nearly obsolete. My guess is that there will be a short-term slowdown, but when things pick back up, more people than ever will be using cashless payments. This is a perfect storm for a company like StoneCo, and as long as they themselves can get through it, when they come out the other side, things will be looking great. Another thing they're able to provide is anti-fraud solutions. But even more than that, I think that cashless payments are responsible for a drop in violent crime in developed countries. And despite Brazil's many positives, crime still remains a big negative. When people are carrying cash around, there's an incentive for robbery, one that largely disappears when people aren't carrying cash. Of course, somebody still might try to rob you for your Jordans or something, but wearing those is entirely up to you. The move to a cashless society seems inevitable. We went from bartering to using gold to using paper, and now we're in the digital age. And the 2020 crisis really highlighted an aspect of money that wasn't on the radar, and that is that it spreads disease, which is just another nail in the coffin. So all the numbers for StoneCo are in Brazilian real. So I am applying an exchange rate where 1 Brazilian real is worth 20 cents American. In US dollars, the company has an EPS of 11.5 cents. Their revenue was 143 million and their net income was 31.7 million US dollars. The company itself has a market cap of $10.9 billion. Net margins for the first quarter of 2020 are 22%, down from 34% the first quarter of 2019. But that's still pretty good, and the revenue has grown 34% since last quarter. With a young company like this pushing into all these new different areas and fighting for market share, I'm just happy that they're profitable. That's usually not the case. This is obviously a growth company and not really for the faint of heart. They added 50,000 clients in the first quarter of 2020, and that brings their total client base to 541,000, which is an increase year over year of 73%. That's a lot of people, man. Their business model is great. StoneCo profits when their clients profit. That makes it a win-win situation, and it integrates them into the economy itself. And it also provides a level of payment protection. So I try to make these videos as timeless as possible, even though the current crisis can't really be ignored. As for now though, if you're one of the 10 people watching this video, what kind of advice would I give on this company in the near future? A lot of analysts with their crystal balls are predicting a 10% pullback in the near future, or greater. However, seeing the future isn't one of my superpowers, and I can't really predict what's going to happen. But you may want to add StoneCo to your watch list, and if things do drop, consider picking up some shares. One thing I've noticed about this stock is that it can go up or down 7 to 10% a day, and that's before the markets became more volatile. So even in relatively good times, there are opportunities to pick up this stock at a good price. Never mind if the market is actually going to descend like 10%, then a great price might be on the horizon. I really like this company, and just like all the companies I talk about, I already have StoneCo in my portfolio. So I hope you enjoyed today's topic and that you'll add StoneCo to your watch list. Have a beautiful day. If you like what you saw, give me the thumbs up and subscribe. And don't forget what I told you.